Good afternoon, everyone, and welcome to the Monday Open. My name is Mark. I'm one of the senior relationship managers here at Vantage Markets Australia. I'm based in Melbourne. We also have my colleague up there in Sydney. How you doing, Jeff?
G'day, Mark. Good. I'm good, mate. How you doing?
Yeah, I'm good, thanks. I'm good. So, what we'll be covering today is what's happened in the markets last week, what's upcoming this week, a bit of technical analysis, and some Q&A at the end. I'll flick it over to Jeff now to go over what's happened last week and what's upcoming this week.
All right, easy. All right, last week we had Australian consumer prices, that's the inflation number, edged slightly lower. It was lower than expected, which you would say is weaker than expected, but at the same time is better than expected because it's lower inflation. It's at 2.1%, running on one of the measures, which puts it firmly within that RBA kind of we're ready to cut rates sort of area. That data did have a little bit put a little bit of pressure on the Aussie dollar straight out of the chute as soon as it came out, simply because if the Australian RBA was to cut rates, that would pressure the Aussie dollar lower. So the market was reacting to that. We also had the Japanese Bank of Japan leave their interest rates unchanged. That was broadly as expected. There wasn't a great deal of reaction to the yen on that piece of information, which proves, I guess, that it was fairly priced into the market being unchanged. And then yesterday, on Friday, we had US non-farm payrolls come in weaker than expected, significantly weaker than expected after 2 good months. That prompted a little bit of dollar weakness initially off the bat before late Friday night trade saw the dollar claw back some of the losses to end the day kind of in that flattish type of area. Obviously, weaker non-farm payrolls would make it a little bit easier for the FOMC to cut rates, which is something that we're going to talk about in the this week component. So that wraps up last week. This week, we've got a lot of things on the calendar. We've got the Australian RBA to announce on interest rates tomorrow on Tuesday. There was a survey that came out this morning in the press that cited all 4 of the Australian Big 4 banks saying that the RBA will do nothing tomorrow and do nothing in December. All of them are expecting their the first rate cut from the RBA in February. Just to be clear on that as well, the RBA doesn't meet in January. So if the RBA was to announce a surprise move, it would be any sort of move would be a surprise to the market. A cut would be very bearish for the Aussie dollar, given the interest rate differentials are an important factor that contribute to currency movements and stability. But as I said, the Big 4 banks and myself are all expecting no move from the RBA tomorrow. Also tomorrow we have the US presidential election. Obviously, given Donald Trump's previous history with elections, there will probably be recounts and legal challenges to whatever is the result. So we probably won't get a result. I would be surprised if we had any sort of definitive result by the end of the week. Polls at the moment have them pretty close, I think, but that's something we're going to talk about a little bit later in this presentation as well. On Thursday, we've got the big 2, the Bank of England and the US FOMC, to announce on interest rates. The Bank of England is expected to cut interest rates by 25 basis points, which is what they've done for the last 2 months. So just to continue that easing cycle. The FOMC is also expected to cut rates in the US by 25 basis points. I think 50 would be a really big surprise there in the States and would contribute to a lot of dollar weakness. But 25, I think, is fairly priced into the market, wouldn't you say, Mark?
Yeah, I think most likely 25. I think it's about a 90% chance.
You're talking about futures markets. All right, well, that's they get it wrong all the time. All right,
you never know. Could be 50. You never know. Yeah,
could be 50, could be 25, could be 100. But I think the market is expecting 25, so that's where we're comfortable with. I think for the Aussie surveys, they survey 6 or 8 banks that are based in Australia, and that's local and offshore banks. For the when they do the surveys for the FOMC, the Fed, they survey between 30 and 32 banks. So obviously, it's a little bit of a broader subject matter for them. So this is technicals. I'll pass over to you, Mark, for the text.
Yeah, sure. All right, so we'll be covering Aussie USD today, dollar yen, and if we have time, we'll go through gold as well. So I'll quickly just share my screen. Do you see that, Jeff?
I can, yes.
Perfect. All right, so we have the daily chart here, AUD USD. So most recent price action, we've broken this support level here at 0.6665, 0.6622. That's on the back of dollar strength, AUD weakness. But just recently, actually, this morning, we actually had a gap. You can actually see that more clearly on the 4-hour chart here. So we had this gap in the Aussie dollar. That's primarily USD weakness around the non-farm payrolls on Friday. It may also be something to do with the elections as well, but there is going to be a lot of volatility this week. So you can actually see here the Aussie's broken this trend line just recently. That's a nice sort of trend line that it's broken, so it's gapped up. If this was to continue up, you would see some profit taken most likely around this level here. Otherwise, it may even sort of come back and fill the gap, which it does most of the time. But you never know. So I mean, it's got like 6608 at the moment, all the way down to 0.6562. So it's about a 40-50 pip move there. We're just going to see how it plays out. So next one is the dollar yen. The dollar yen's been an interesting one. It's been rallying up ever since about start of October. That's based on dollar strength, high yields. It's just recently met this resistance level here at 154.50, 151.80. You've seen a bit of a rejection there. But what's interesting is if we go to the 4-hour chart, you can actually see some bearish divergence here. So prices are making higher highs on the chart, but prices here are making lower highs. So that tends to suggest a slowdown in momentum. You can sort of already see it slowing down. We are sort of testing this level here. So I mean, I would like to see a break of this level here before I push down to this sort of area. Sorry, 1 second, my bad. All right, yeah. So if it does break this support level here, you might see a retest of 149.50, 148.30. And if you go down to the hourly chart, you can sort of see price actually more clearer there. We're currently just testing this level. Now, moving on to...
Sorry, Mark. Lots of lower highs there,
Yeah.
mate.
Yeah. It's lower highs, one here, one there. We even gapped lower this morning as well due to dollar weakness. You can see that here. But I think like once the election sort of passed, the Fed makes its right decision, you sort of start seeing things maybe calming down, but there's going to be pretty volatile this week. We'll jump over to gold now. So gold, 4-hour chart, you can sort of see some profit taken here that occurred last week. And then it's currently testing this trend line at the moment. So if it was to push up, you might see these sort of levels come into play, 27.50. If it breaks this, maybe 27.80s, around that level there. So we can look on the hourly time frame as well. You can sort of see a double bottom as well here, with some bullish divergence. You can see here. So again, prices made lower lows, but this one's actually making higher lows. So again, it's a blow down in momentum. So we might even see a push up from here. We have this EMA as well, which needs to sort of break before we can push up to this area here. And that's that's all for technicals. We'll go through the question and answers now, Jeff.
Mm-hmm.
So I'll cover the first question. So who is tracking to win the US election? So at the moment, the most crucial thing at the moment is the swing states, which is also known as the battleground states. They're states like Michigan, Pennsylvania, Georgia, Virginia, North Carolina. So what the swing states are is basically you can go to either party, either the Republicans or the Democrats. It's literally like a 50-50% chance. So they're going to be very crucial as to who wins those. So if Trump wins even a couple of them, he might be the next president. The betting markets at the moment actually have Trump uh, in favor. Actually, last time I checked, he was paying $1.75. Harris was paying about $2.10. So the betting markets are betting for a Trump win. But I think early voting is actually tracking. Actually, Trump is leading in early voting. I don't know if you saw that, Jeff. But some of the polls are saying, yeah, Trump is leading in the early voting. But again, with the polls, they do differ depending on the polls. So overall, it's a tight race.
Very tight race. I can't remember an American election where it wasn't at least a little bit more spread out than it is now. I mean, we've got different polls coming out on the same day saying Trump's going to win and Harris is going to win. So
Yeah,
interesting
exactly.
times. Interesting times. Interesting times. Question 2. I'll do that one if you like, mate. What do you see on interest rate moves throughout the rest of the year? We've already covered the Australian market. No moves on interest rates in Australia until early next year. On the US, we're expecting 25 basis points this week, and probably that'll do them for the year. On the Japanese, the yen people, the Japanese will keep their rates unchanged this year. There is a little bit of a risk to a hike in December over there in Japan, but I'd say the chances of that are about 20-25%. In the UK, I think we're going to continue to see these little 25 basis point chops. We'll see one this week and then maybe another one in December. So likewise, in the Eurozone, obviously for the importers and exporters through that Eurozone and UK space, it's very important that they keep currency stability in place between sterling and the euro. So I think you'll find that the relevant people there that are making those decisions are talking to each other and making decisions that are across both of them rather than just one. The other thing of note, I guess, to keep in mind is China is the bear that could really throw the spanner into works into many markets. The National People's Congress, which only happens once a year, is on now. It started today. And there is talk that they're going to be discussing another stimulus out of China there on the final day, which I think is either Wednesday or Thursday of this week. That stimulus, if they were to decide to do that, would be supportive of the Aussie dollar, I think, because China is our major trading partner. There is also, I guess, risk that they might cut rates over there in China as well. Or lean towards and push. I mean, obviously, China, like every other country, is just a major pyramid, and the higher you are up on the pyramid, the more pressure you can exert on people below. So that is it for question 2. In terms of us, this live stream will be uploaded to our VIP trading room once it's completed. If you wanted to watch it again, or if you've missed it now and you wanted to watch it afterwards, that's where you can do that. It's also going to be uploaded to our YouTube channel. Also within that trading room, excuse me, we have the staff from the Everest Fortune Group, which is a group of analysts out of Singapore, work very closely with the hedge fund space up there, those guys, and they can answer questions for you guys. Mark and I are logged into that all day long as well. So if you don't have time for a phone call or you can't get to an email, feel free to shoot us a note through there. We also have our weekly technical analysis video, which is uploaded every Monday morning in that trading room too. And we have our daily private client update that goes out via email and is also uploaded to the trading room. So if you want to be added to that mailing list, please feel free to reach out to Mark or I, either via email, a call, or through the trading room, and we can have you added to that priority mailing list. That's all, I think, mate. I'll see you on Monday.
See you, Jeff. Take care.
See you, mate. Bye-bye.
Cheers, mate. Bye.